All right, a good welcome to everyone. Mic checks in Njavwa, mic checks. Mansa?
Hello.
Just say hi to everyone and
All right. Hi, everybody. Can you get me?
yes, we can get you loud and clear. Njavwa, can you test your mic as well?
Hello, you guys can hear me?
Yes, we can get you loud and clear. All right, so welcome everyone to our first series actually of founder stories. Interesting that we have Njavwa Mutambo, who will explain himself and tell us a bit more about the story behind Musanga. So really the platform is where these stories are being shared to really find out exactly how businesses run, especially in our ecosystem, and a lot of people that are coming up with businesses. Could be some lessons that can be learned from as you're starting, or maybe as you're already in business, or maybe as you're looking into starting a business. So focusing on the areas of things like customers, finding customers, finding investments. So looking at all of those things that have happened. And it's a good thing that Njavwa has given us his time to talk to us about how it went with Musanga, especially that it was a startup that was started in Zambia in, is that 2016? I think I do remember those days when Njavwa was at the Hive and spending some nights there trying to create the MVP. Proud to say that that was one of the first customers as well too. One of the few first customers that tested the tested the business at the time. So welcome, Njavwa, and good to have you here. We also have Mansa, who's the co-founder and, if I'm pronouncing it right, CEO of Spotless Africa, who talked to us more about it, but he's the one who's going to moderate this session. And Njavwa is in the hot seat today. So welcome everyone. My name is George and I'm the community liaison at Bongo Hive. And I'll hand over to the facilitator and Njavwa to take it up. So guys, all the best. Cheers.
It's a webinar.
Great.
The honor of one entrepreneur from Bongo Hive.
Thanks a lot, George. Thank you for that welcome. My name is, as George has indicated, my name is Njavwa Mutambo, and co-founder and CEO of Spotless Africa, a cleaning services business based in Lusaka, Zambia, and we mainly work with businesses trying to provide cleaning services for them and delivering products to their cleaning for their cleaning needs. So today is exciting because it's not about me, so that's how I'm a bit hesitant to even mention anything, because I mean, who would want to hear anything about me when we have Njavwa on the seat today? Njavwa, for me, is like Bongo Hive's firstborn child, you know. So he always gets the nice seat, and today he's on the hot seat because we want to have a little bit of conversation, not just about a little bit about a current startup, but mainly about Musanga, which was the logistics business that was running in Zambia a couple of years back. And the reason why today's session is very important, or why I think it's of great interest, is we, as Bongo Hive, obviously there's a lot of conversation around scaling and growing a business, but there isn't a lot of conversation around what you do when a business starts to fail, or the execution of the business just isn't going the way that's supposed to go, right? So what do you do? And the exit of the business as well. When do you call it quits? How do you do it? who do you talk to first? Like, how do you go through that mental process of actually almost killing the baby that you had started? So that's why today's session is of particular interest to me, and I'm sure must be of a lot more interest to the people. And for the very first time, Njavwa will be talking about Musanga and what happened with Musanga, apart from the few times that he's written about it. So that's of great excitement for myself and a lot of the other people that have shown interest. So thank you so much for joining us today. Njavwa started off his entrepreneurial journey at a very young age, and he'll be telling us a little bit about that in terms of his background. And George and many others, we've learned that he was at one point sleeping in the basement of Bongo Hive just for him to start Musanga with the time that he was developing his MVP and hand delivering most of the stuff that needed to be couriered the time that he had started Musanga. So it's a great story to hear and just listen to what he's managed to build from the lessons that he had from Musanga to now a company that has raised over $1 million and scaling across Africa. As we are speaking to him today, he's in Lagos because his business that has headquarters is in Nairobi, but has branched off to the biggest market in Africa, which is Lagos in Nigeria. So great, exciting story and a lot of stuff for us to unpack with Njavwa. So let me just say, Njavwa, welcome.
Thanks
Njavwa,
for
are you
that
there?
intro, Monta. Yeah, can you guys hear me?
Hello, Njavwa.
Can anybody,
Okay.
can you guys hear me well?
I can hear you.
I can hear you well.
I can hear you.
Oh, okay.
Yeah,
Yes,
thanks
now
for
we
that
can get
intro.
you.
Yeah, thanks for that intro, Monta. I appreciate it. Once if you're speaking, actually, I can't see you anymore. Is it just me, or is that something everyone else is?
Okay. So can you guys get me?
We can. George, are you there?
Yes, Monsi, we can get you.
George, hello?
Yes, Mansa, we can get you.
You can get me. Okay, but can you see me?
Yes, we can see you as well.
You can now see.
Oh, okay, great. Okay, all right. Awesome. Okay, thanks a lot, Njavwa. So let's go from the beginning. Musanga, you are sleeping off of Bongo High's basement. You're trying to figure out if there's an actual market for this big idea in logistics that you had. What were you thinking about? How big did you think it would go? What was going through your mind in the early stages of Musanga?
Yeah. So firstly, thanks everyone for coming through. We started Musanga. It was actually Musanga at first in around 2015, and like you rightly pointed out, I started my entrepreneurial journey quite young. And so at the time I was starting Musanga, I was maybe 20, 21. And so I was literally going through the phase of work all night, work all day. And like, I remember going through this phase thinking that, if I slept more than 5 hours, I was going to be a failure in life. And so I would just like sleep at Bongo Hive and get work done with Charles Mwanza, who was our initial partner. But I didn't start out thinking we're going to build something insane. If you go back to 2015, if you go back to 2015 Osaka, we had like .com Zambia as like the one tech company that had raised money. And so I thought that's as big as we could get, right? That was, I was like, man, if we ever get .com's level, that's like an IPO in my books, right? And so there wasn't really much to aspire to. And so, we didn't start out thinking it would be big. I remember even, anxious to tell people that we might be pan-Zambian, across the country. And so, in the early days, it was really just about, can we build something that people think is cool? We had the idea for this, and in literally 2 days, Charles had built the website and the MVP, and I was COO at the time, I think, and we did our first delivery for Chisenga Muyoya, the CEO of Asikana Network at the time, and that's how we started. There was no big dream, there was nothing, and I think as things start to work, I found it tends to change your aspirations.
Yeah. So at what point did you realize that we actually are onto something here?
Usually when money starts coming in, you're like, okay, something's happening here.
Is that from the customers or from investors, the money?
No, there were no investors for the first 2 years. I think we started, I think, some background on the problem we're trying to solve. I think, what we were trying to do initially was help restaurants. But if George remembers, or anyone who was there at the time remembers, the first version of Musanga was actually Musanga Food. And our initial idea was that the best way to help restaurants grow is to help them deliver products. And so we were essentially a restaurant delivery platform. And this space in particular has been one that I've been in pretty much my whole life. I grew up in the restaurant industry. My mom ran a restaurant for about 30 years. And so the first business I started was a food delivery app. And then Musanga was kind of the tech version of that very application. What we found out was that in markets where people have more time than they have money, which Zambia certainly is the case, and the majority of Africa for the most part, in markets where people have more time than they have money, delivery is a luxury that people can't afford. And so after 6 months of really struggling to sell, I'll go buy food from, somebody would order Hungry Lion and would go there, buy it for 20 kwacha, get 5 kwacha delivery fee. And, we're like, man, there's no way we're ever going to make money. And so in the early days, we'd sleep at Bongo Hive, not only because we're working, but sometimes I didn't have transport to go back home until we bought like our very first bike, which we would use. But the initial version of Musanga was Musanga Foods. And the hypothesis there was, can we help restaurants grow by delivering products to the end users? 6 months into it, we had purchased the first bike. We had also built quite a lot of technology, which was delivery technology, which enabled us to quickly pivot into just general packages and moving things around. But early days, it was really just food delivery across Lusaka.
Oh, great. Just quickly get us to the first investment that you ever got from Musanga. How did you close that, and what was going through your mind throughout the process? Was that like your first major big win? What happened?
Yeah, I think the first external funding we ever got was actually a grant from a Nigerian entrepreneur called Tony Alumelu, who's still my favorite entrepreneur to date. But the first money we ever got was through the foundation, and that's really what gave us momentum. We bought some bikes. We started to look good as a company. And then I think things changed when I met a guy named Njavwa, no relation, but another guy named Njavwa who was an investment banker at the time, was just setting up a venture capital fund that people now know, Zenga Ventures. And we know he was in Zambia. He lives in New York. He was in Zambia. I was telling him about the idea, telling him about the vision. I think at this point, the vision had gotten a lot bigger than trying to be a Zambian delivery company. And so, he invested. Actually, before Zenga Ventures came in, the way that I got my my co-founder was that like it was a co-founder, the guy named Emmanuel Kwenda, who at the time was working for KPMG, um, and you know, I think I was doing a delivery there, and somehow managed to pitch this idea to him. And he invested 15,000 kwacha for 15% of the company, I believe. And I was like, man, this is such a great deal. I'm so smart. But you know, he also agreed to join as co-founder and CFO. And then afterwards, we raised money from a fund called Zenga Ventures. And then, you know, went on to raise some more money after.
Okay. Interesting. And I think a lot of people's stories also usually start with grants because they give you a sort of, almost cheap money, so to say, enough money to get you going and get some traction and actually start to look like a serious business. So that makes absolute sense. Let's quickly run to the peak of Musanga. How big did it get?
Yeah, so you know when we started off as a food delivery company, and then things really started to take off when we pivoted to just general deliveries. I think one of the things that we did really well for the Zambia market was that we were really good at delivering products, right? So in terms of like just motorbikes moving around, was just an operational part of it where people would order something and have it delivered on time. That's the one piece. Um, the other thing is that we're actually really good at technology as well. And so a lot of the customers that came to us, you know, they had a differentiated experience. I remember just one thing, it seems like a small thing in hindsight, but you know, the fact that people could track their deliveries and get get SMSs every time. I remember like playing with the you know, you'd get an SMS every time, you know, you request an order when the driver is on his way, or when the driver is like a kilometer away, you get messages. And I remember this time we played with a copy of the SMSs and basically just said, "You rock star, thank you for ordering with Musanga." And then when the driver was on their way, the driver's on the way, sit right there. And people were like, "Oh my God, we love this service." And they started tweeting about it, right? And so, you know, you're working with small businesses. And so that started to take off. And what we saw was that because we had built the expertise to do deliveries and the technology to do deliveries, and you know, the thing that really was the tipping point for us is that we saw that some of the businesses and the merchants that we're working with started to grow, and so they needed more than just motorbikes. And so, you know, I think there was one company that we used to work with that's still in Zambia called Moringa Tea. And you know, we used to do deliveries for them on motorbikes. And then one day they asked us for trucks, and they're like, "Hey, do you guys have trucks on your platform?" We said yes, even though we didn't. And you know, that's how we got into the trucking business. And so I remember going out and you know, we signed up our first truck driver on the platform, gave them the same application. And that's when things started to take off because you know, we tapped into this market where there was significantly larger addressable market. And you know, that's something that you know, I can talk a little bit about later, but you know, just the need to be in something that has a huge TAM, a huge addressable market. And so, you know, when we started to get into the trucking business, that's when things grew significantly. And yeah, you know, at our prime, you know, at least 80% of Colgate's products in Zambia were delivered by us. And you know, you're thinking the Colgate is delivered by a company called Horizon in Zambia. And all of those things were passing through us. That's a deal that we were able to get from the South Africa HQ. And because of our technology, they wanted to see more data and more analytics. And so, you know, just to give you a sense of some of the customers that we eventually started to service, it was that. And we had thousands of truck drivers on the platform that were registered with us. And yeah, so we moved from being a food delivery company and trying to deliver Hungry Lion to like delivering products on behalf of manufacturers using independent truck drivers and motorbike riders.
Okay. What was the highest revenue you made in a month with Musanga?
Yeah, so it was definitely in our last year, it was in the hundreds of thousands of dollars. And you know, I write about this in our when we're shutting the company down. One of the challenges, you know, when you're serving big companies is that you're constrained by the way the model works is every freight marketplace is the same, actually. Hasn't really changed much. But the way that the freight marketplace industry works is that Colgate comes to us and says, we have these shipments that we need to move, but they'll pay us after 30 or 60 days. Whereas if you're working with an independent truck driver, they need the money there and then, right? Because if they're doing a trip to the Copper Belt or they're doing a trip to anywhere in the country, they need to make sure fuel is sorted out. These trips usually take 3-4 days, so they need to make sure the family is sorted out. And so you're putting the money up front, and you're getting paid in 60 to 120 days sometimes. And so one of the challenges we had, and again, this is public information, I wrote about this, is our largest customer decided not to pay us. And you know, we had at least 60% of the cash we raised, and at that point we had raised a seed round close to about $250,000, and we had a huge chunk of that money in this one customer. And so if you're unable to pay drivers upfront, it means you can't really match the demand that's coming in. So it limited the growth that we eventually had, and that also, you know, eventually led to us failing to grow because of that financial constraint. So it was definitely. I mean, in hindsight now, you know, it's crazy. Like our annual revenue then is like weekly revenue now for me, but at the time it was like everything, right? It's kind of like, man, this is, you know, like, we might IPO off of this, you know. And so yeah, that's kind of where we got to now.
Okay, we're going to jump quickly now into the time when it all started to go downhill, right? And like you had said, you talk a little bit about this, where you had fulfillment rates of, you know, less than 15% whilst you're running Musanga, and the fact that you had failed to raise the capital to fill the gap that you've talked about, where you need to pay upfront whilst your clients are paying you 30 days. And sometimes people that have worked with these businesses, they even take longer than that, you know. So when did you realize it's about to be a train wreck? You know, what numbers were you looking at? And how did you actually know to say, okay, we're headed down now and some decisions will have to be made soon? Yeah.
Yeah. You know, I think when we couldn't meet payroll anymore, and you know, and I couldn't pay my own rent, and you're like, okay, something's there's clearly a challenge here. But you know, one of the things is that we this customer that, you know, became our largest customer, we actually took them to court. And so they hired, you know, we were like, guys, we need our money, because drivers were on our neck, right? And if you worked in finance in Musanga in 2019, it was a terrible place to be, because all the drivers who used to get all the payments on time suddenly don't get the payments at all. And there are a few people that, you know, if you owe the money, you can survive. Don't ever owe a truck driver money. I don't recommend it. It's not great for mental health. It's not great for anything, right? You know, truck drivers are the worst people to owe money. I'd rather you just don't take any of those people's money. But you know, when truck drivers are like, guys, and we had tried to build a community of truck drivers. We had them on one chat where we're keeping them up to date. And so, they started saying, hey guys, if you're not paying us, we're not coming, we're not doing these trips. And so number one, growth slowed down, right? So we went from growing up, hockey stick growth, to like trending downwards. And at the same time, we're like, okay, well, we need to get our money. So let's engage lawyers. And so we engaged lawyers. These guys countersued us. And they used one of Zambia's biggest law firms. Don't even want to mention names. They used one of Zambia's biggest law firms. And we used a guy named Gilbert. And, that's another thing. You should always have a budget for the lawyer. Those are not areas you're going to save money. But, all of those things meant that, instead of us recouping our money, we actually lost money trying to recoup our money. And all of these things, just started to spiral out of control. But I think, also something that, you led with was, I started this business when I was 21. Right, and did that for 5 years, where we grew the team across 2 cities. I also wanted to do something different in my life. I'd never really worked for anyone else or worked anywhere else, and was like, always looking at other ecosystems and wondering like what the hell is going on. And so it was number one, the daily struggle where things are just not working out well, and also just the need to like say, hey, I want to learn something. When you're always in do mode, it's difficult. So that's when we started, when the money wasn't coming in and couldn't meet payroll. I think we met payroll every month until the month was shut down. But then my co-founder and I, we couldn't pay ourselves. And so I was basically living off of my girlfriend at the time, and, kind of leeching off of that as a way of survival, right? And so, it just became challenging where it became apparent that, a decision needed to be made. And so in December of 2019, my co-founder and I said, hey, listen, let's give this one more quarter, do what we can do. We've given this thing our best. And, if we don't raise money, number one, first, if you don't raise money, you don't really have, you can't really pay drivers to do more deliveries. You're trapped, right? So you need that liquidity to do it. But if we don't raise money, hey, let's call it a day. We've learned, we've done what we can do. We were very judicious with the way we spent money. We never misappropriated any funds. We gave this thing our best. We worked every day we could. We can call it a day comfortably, right? So that's kind of the mindset for us. So it was like, all right, let's give this a few more quarters and then really go at it. If we fail, all right, let's move from there.
Interesting. Interestingly, in 2019, I had an opportunity to meet, I think, an investor that has got like interest in Zambian businesses, right? And in 2019, and I had a conversation with him. I think we're in Kampala, Uganda. And so when he was talking about some of the businesses he had chats with and interest, your name came up and Musanga. And then another gentleman who's of Asian descent came through and he said, that guy has been offering Musanga, Njavwa, some money to buy off Musanga, but Njavwa won't give him, won't give it to him for the money that he's requesting. Were you thinking about selling it as an option? Was there, anything in those lines? Because I'm looking at the business you had built, the systems and whatnot. Was there a bit of a fallback plan, as in terms of opportunities with selling the business instead of shutting it?
Yeah. So, I mean, best to my knowledge, we only had one serious acquisition offer with Musanga, and that was in, I think, 2018. It was with a relatively well-known entrepreneur, who's based out. The mother entity is a Zimbabwean one based out of South Africa, and they were interested in acquiring us. But, you know, when things are going well, you know, it's especially when things are going well, it's difficult to think about that. And also, I think my mindset has shifted now, where I can look at things objectively. But you know, when you're starting, you know, a company, most times you want the company to be the next Facebook, or you know, that masterpiece that becomes this massive success, right? And so you're like, you know what, I don't want to sell because Mark Zuckerberg never sold. Whereas if you ask me now, and ironically now, like things are going a lot better, but if you ask me now, I'm like, yo, let me see the deal first. Let me see what's going on, right? Right? And you know, I think now my approach to businesses is less, hey, it's less of let's build this masterpiece. It's more of like the way Jay-Z would think about his albums, for example. You have one album and then you build a catalog of really great albums, as opposed to having one great album, which is what a lot of young people think about first. Like, hey, let's have this one great company. Whereas like now it's kind of like, no, let's have several, you know, really, really good companies. And, you know, I think that in terms of like acquisitions and stuff, like that's something that I only remember one coming up, one serious one at least. And, you know, towards the end, we did try and sell it. But the other thing that happened was that the world shut down because of COVID-19 in 2020. So, you know, we had initially tried to sell it to a company, which I eventually ended up joining, called Lorry Systems. That conversation was put on hold, budgets were cut down, and all of those things. And so, you know, that didn't eventually pan out. But, you know, those no serious offers to sell.
Okay. Fair enough. Fair enough. For those that are watching us through Zoom, Facebook, or YouTube, whichever social media network you're watching from, you can type in your questions for Njavwa, and I'll get to them when the time for Q&A comes up. Let's now get to the part where we're closing down the business, right? The decision has been made. And what was the time between the decision that was made and the actual closure, and what was the process in between, right? All the way up to you informing your entire team to say, you know what, we're going to close this thing, we're going to shut down, you know, and you know, you go and find a job somewhere else. You know, like that process, how, because I think that's a lot of the stuff that as entrepreneurs we get to struggle with, even at the time when our businesses are not doing well. You know, just the thought process of you going through, making the decision and actually closing down the business, like let's park, let's move our chairs, let's move our files, like that process. How did it go?
So I think the first step was, you know, we had a board. I think one of the things that helped us grow, actually, and this is advice I like to give. Like we had a pretty active board of directors, right? Again, you know, knowing what we know now, it's like it's you know, having that board was important. And so when Emmanuel and Daniel and I made the decision, and these were the team members that we had. And when we made the decision, like, hey, this last quarter, let's try and give this our best. We actually sent a note to our investors saying, hey, listen, guys, if we don't raise money at the end of February, well, because rent's due, you know what I mean? Like we have all of these things and won't be able to meet salaries and all of these things. And so it's like we told people ahead of time, at least we told the board ahead of time. I think it was particularly hardest on the people that worked with us. And in hindsight, you know, that entire process could have been done better, where, you know, you have people who put that blood, sweat, and tears into the business, right? The least you could do is like keep them in the loop through the process. And so, you know, in terms of like our board members and our investors, that was a much easier conversation to have, ironically. The harder one was like, hey, all right, now we have all these team members. What's the next move? And that's honestly, I think that, you know, when we think about some of the difficult moments of shutting down the business, it's really about, hey, have I let these people down, right? It's because for all intents and purposes, as a founder of a business, you know, it's easier to land on your feet, right? It's extremely easy. I mean, now, you know, when I'm hiring for certain roles, particularly roles in product and sales, I like to look for people who've been founders before. And so, you know, like the people on my team, you know, there are quite a number of ex-founders that I work with, and that just, you know, it's because, you know, if you're a founder, it's a lot easier to find a job. So, like, for me, you know, I went straight from Musanga into something. So I didn't really have like a period of time where I was just like sitting looking for the next thing. But, you know, I had a team that, you know, had to, you know, find something. And so in hindsight, you know, I think the key lesson there is communication with your board and your investors is important. But then also really good communication with your team members and the people that have been busting their asses trying to make this a success. And then obviously the last thing is also like your customers and the truck drivers. And so, you know, that's another thing that people just heard about it 2 months later. Like, hey, what's going on, right? Like, so it's like all of those small things. And so, you know, what Emmanuel and I did was a lot of our truck drivers who were owed money. Remember, the business owed them money. Even as we shut the company down, one of the things that I'm very proud of is that even as the company shut down, there were a lot of those truck drivers that, you know, would give us trucks when we didn't have money. We've had to pay, we put them on a plan and we paid them from our own income. Like, I think, you know, just ensuring that, hey, listen, guys, the company may not shut, like, you know, you dealt with an entity, but we know we're dealing with human beings. And so, you know, it took us a long time to pay them back. But that's something that we eventually, you know, I think we're still doing, I don't know. But, you know, it's there are a lot of those people that we put in plan. But yeah, I think the key lesson there is that communication is important, not only with your investors who, ironically, it's a lot easier for them because as an investor, the likelihood, you know, the stats are basically that most of your companies will fail. So they're actually more prepared for failure than you know, employees or your suppliers and stuff.
I get you. And you talk a lot about your staff, right? And how ultimately success and failure of the business depends on the people that you hire and the kind of talent that you get to hire, right? And in the latter stages of Musanga, you do mention that you didn't have somebody with the operational expertise that you needed. And sometimes not because you wanted, I think you mentioned that, not because you want, but because you just can't afford the kind of talent that you need. So what lessons did you learn from there, and how has that changed the way that you now do hiring in the different enterprises that you run now and probably will run in the future? Like, how's that changed your outlook on the hiring process?
Yeah. So, you know, I speak a lot about people. If you look at the average age, you know, when we're starting the business, the only people who could work for us because of how little we paid were just like other people, friends. Actually, I think the longest serving team member was a guy named Muzo. If you're at the Bongo Hive, you probably know him well. And, you know, it's people like that who are just like loyal to the mission and like would really do anything. I think Muso would have joined the team whether we sold popcorn or whether we sold, you know, underwear. Like he just loved, we just love working together, right? But, you know, when the business is scaling, it's going from, you know, 0 customers to hundreds of thousands of dollars worth of revenue. First and foremost, the accountant, the operations and all these things, they need to take a step up. And sometimes in organizations, it's difficult to bring in the right person at the right time. You think about, a company is really like a bus. And, as founders, you're drivers of this bus. CEO, you're in the driver's seat. And every one of your team members has a spot on the bus. And, sometimes you need to move people from one spot to another. And sometimes it is the case that, maybe the person can no longer be on that bus. And those are some of the more unpopular decisions. But I think more specifically for us, the key things that we needed were around ops. And when I speak about ops, it's really about you went from doing a few deliveries to taking over a large account like Colgate, where you're doing most of the deliveries, and you're dealing with thousands of truck drivers. Like, how do you organize that in a structured way, right? The second thing is actually something that every founder should know about. Like, every founder should just get this skill. It's how to raise money. The ability to bring, like, if we had raised money, it would have, raising money tends to help with a lot of things. Like, even when you have challenges or there's turbulence, if you have money, you can withstand some of these things. And so just the ability for us to attract capital. In hindsight, it wasn't just a company specific thing. It's actually, Zambia was a hard sell for us. And I think things have changed now. But having now raised money in being based in Nairobi, and I'm spending a lot more time in Nigeria and San Francisco. You raise money because people trust you, and people trust you because they see you, and they see you because you're near each other. A lot of our investors now, and you rightly pointed out, for this company, we've raised nearly $2 million now. A lot of them now are like Nairobi-based investors who, can write $500,000 checks, and if you send them an email, the likelihood that you see them at a coffee shop that afternoon is quite high, and so they remember you rather than some guy who's in Zambia trying to pitch them. So you have that edge, right? You have that edge where it's like you're in people's faces, and so that fundraising thing, is a skill that I like to think is an important skill for people to learn, just because you're, for the most part, you always be trying to get somebody's money. And if your product is not growing at the pace of Mark Zuckerberg's company, you're going to have to pitch your company. There's some people who never have to pitch their companies. They're just such great products, right? But for a lot of us, it's going to be an uphill battle trying to convince people to part with their money and invest in us. So, I think the operational part and also the fundraising piece were key things that we didn't have.
Okay. And just double click a little on the issue of talent, right? I remember you once mentioning that we have to, the problem with most of us founders is that we are loyal to the employees and not to the business, right? So you gave that anecdote of being on the bus, right? And every now and then, for entrepreneurs and founders, it's not just about who's on the bus, but are they on the right seat of the bus? And that's why I talk about moving them, from one seat to the other. And every now and then you have to kick them out. Most of us, because you've created relationships with your staff, right? You kind of feel inclined not to cut them off. But even when you know that, for the sake of the business, this decision has to be made. Has it become easier after the failure you had with Musanga for you to say, you know what, you don't fit, with the culture I'm trying to develop? And maybe you could also talk about that culture and how the talent that you select gets to meet with that, and how you kick people off if they're not meeting that culture trying to build.
Yeah. So I don't know about other entrepreneurs, but it hasn't become easy. it's not easier for me to like join us, but this isn't working. It's actually still very hard for me. Can you guys hear me? One second, can you hear me?
Yeah, I can get you now. I lost you for a bit, but yeah.
Yeah, I think I haven't found that it's a lot easier to part ways with people, and I think now we have maybe like 50 employees or something. I think what's different now, and I'm happy to plug in Top Up Mama and what we're doing now. But I took a year off before I started Top Up Mama, and one of the things that we did early on, one of my co-founders, I credit goes to her for doing this, is I used to say I hire based on vibes. So if you know anyone in my team, they'll tell you that, like, I hire based on vibes. But my co-founder is more process oriented than I am, and so when bringing people in, there's a combination of both things before we make the decision on like who joins the team or stuff. So the first thing is like try and bring the best people in the first place, so that you're not having to fire people, because I honestly don't like it. Like, yeah, I don't like it. It isn't. We have, even in the last 1 year since we started the business, we've had to make certain decisions where somebody doesn't continue, but it's never like something that I'm like, oh, this is a lot easier than it used to be. I think now it's a lot more logical. It's like, hey, listen, the process leading up to somebody leaving, it's very clear. There's a, hey, this has been the expectation. We're not quite there, and if it persists, it happens. But my answer here is that firing people hasn't gotten easier for me. I think it's even harder now. I think as I'm growing older and like working with people and working with older people as well. Like early on, like if you looked at my team at Musanga, everyone was like 22, 23. You're like, what? This guy was probably going to be okay, like living with their parents anyway. Now it's like real families depending on the business. So it's not like, you're just dealing with one person. It's like you're looking at all these other things, which makes it hard.
Great. We'll soon be getting to the Q&A session, and keep on. I've seen a lot of people putting in their questions, and we'll try and get to them as quickly as possible. Tell me about the time that you moved from being a founder to being an employee, because I feel like you need a completely different kind of mindset, right? And most founders are in complete dread and fear of being an employee because they feel like it's being you become a failure, right? So talk to us a little bit about that. There could be founders that are navigating that as an option where things are hard, and maybe the best way out could actually to go and just get employed. Like, how did you navigate that?
Yeah, I mean, I think I'll start off by saying that shutting a company down is emotionally difficult. I think at least it was for me, and perhaps that was because it was your life's work. You've put in everything, and in fact, people never even used to call me Njavwa. They'd call me Musanga. So my name and my entire identity was based on the company. And when the company did well, I felt like I'm great. When it didn't do well, I felt like I wasn't good. And so my entire identity was built on this. And so on a personal note, it was a tough year. Like the year that at least the first half of the year, it was just like everything that started to question. I'm like, I remember like thinking to myself, man, maybe I'm not cut off to be an entrepreneur. Maybe I should just go and join Airtel Zambia and try and be like a product manager working in that Chipata office or something. You know what I mean? Like I was like, man, maybe I'm not cut out for this stuff. And I think I was lucky because I moved to Nairobi and I joined a startup called Lorry Systems. And I didn't join Lori Systems because it was another company. I joined Lori Systems because of the founders. And my advice to everyone is always, it's not about the company you work for, it's who runs the company. It's who's on the driver's seat. You want to learn from them. And Lori Systems had, both the founders were really good, but I worked directly with one of the other founders called Jean-Claude. And honestly, I learned a lot. Number one, I just, I think the thing I learned the most was just like EQ. And I know that sounds cheesy as hell, but just the ability to like turn it down and he always used to say how the key to like success when you're building products, for example, is I joined this company as the global lead for product operations, and basically that's just like you're working with the product team to build the tech, but you're also working with the operations team to ensure that the products that you build, the technology that you're building is something that truck drivers in Nigeria are going to adopt, truck drivers in Uganda, and there was always this concept of like the basis of any great product is empathy, right? The basis of every good product is empathy, and it was like this year where like everything that I thought I knew about what makes you successful, I was like, oh man, actually, you actually have to flip it. The thing that was hardest sometimes was like when you only been the CEO, which was my case until I joined somebody else's company. Like my entire life, I was like my own boss in a sense. And one of the things is when you are not seeing things the way you see them. If you are in a position of power, if you are in a position of power and your coworkers are not seeing things the way you're seeing them, you can do a few things. One of them, what a lot of people did, and which I did as well, is turn up the power volume, where you like do it now, right? And and try and get things done through that force, because you can turn the knob. You're the boss. But then working for somebody else it teaches you to like, hey, actually turning your power volume up is not going to work when you're no longer the boss. You're going to have to turn it down and listen and actually build relationships with the people you're working with, and try and get buy-in from that perspective. And so the experience in terms of what it taught me was really, really insightful. But to be clear, it was a tough transition. It was like, man, everything that I thought, I had my whole life ahead of me, and now suddenly it's like making this shift. So it was definitely very difficult from that the first half of the year at least. So yeah, that was my experience. Just the company shutting down, and then a month later find something else, and suddenly it's like, oh man, how do I explain this to people? And then the worst thing is that people would ask me like, so did you guys get acquired? And I'm like, no. No, we did not. So yeah.
Okay, great. I think it's been a lot of doom and gloom. Maybe you could now tell us a bit about Top Up Mama and what you're doing in Nairobi and Nigeria. And with it, I would like you to start off with a bit of preamble around. You mentioned the fact that Zambia was a hard sell, right? And you decided to move to Nairobi, and a lot of things are going right. Okay, is it just the location? What's going on? And also talking about solving the hard problems that we have in Africa and globally.
Yeah. So, okay. So perhaps I could start with a bit of an introduction to what we're doing at Top Up Mama, and then lead to how like we've gone out to like build a team and expand into 2 countries now. But the backstory is that about 1/3 of food consumption in Africa is happening outside of the home. So it's happening in restaurants or school cafeterias or other places, or 1/3, right? So the majority of us, if you work or you're a student, you eat at least one meal on average outside of the home, and that turns out that's the trend across the continent. And there are about 3 million restaurants across the continent, but less than 1% of those have more than one location. So these are tiny restaurants. In Zambia, we call them madivitos, right? In Kenya, we call them vibandas. In Nigeria, there's another name for them. And so these tiny restaurants have, despite them, being a $60 billion industry, have a really hard time growing their businesses because they have to figure out their own supply chain. They have to figure out their own financing systems. They also have to figure out their own sales and growth. And so what we're doing at Top Up Mama is essentially uniting small and medium restaurants to a single supply chain. So as a restaurant owner, you can get on our platform and purchase the supplies that you need to buy your products. And over the last year, we've helped over 3,700 businesses purchase at least over $3 million worth of products cumulatively over the last 12 months. And so, significant growth of that core business. Going back to, the environment, I think when building a company, firstly, obviously you're looking for a large addressable market, right? I think starting off looking for a large addressable market is probably not the way you should look at it. You have to try and solve a problem that you have. And, Musanga started off as a food delivery company. My mom ran a restaurant for 30 years. I knew the challenges that restaurant owners had. So it was a personal problem that we saw. And then the data just justified that this is actually a big market. So it started off with a personal pinpoint, like, man, this, especially like COVID-19, I was kind of stuck in Zambia actually. And in Osaka, restaurants were shut down for a good few months, right? Like, and see how like, you call your mom and call my mom and like things are shut down and there's nothing that they can do. So it was a personal pain point. But the reason why we started off in Nairobi, a few things. Number one was talent. So for all intents and purposes, Nairobi has number one, great local talent. So the universities and just the businesses around there have made it such that there are a lot of people who have seen scale at at different levels. So there's great like local talent, right? And that's one piece. But number two is that you also have investors, right? So when people try and invest in Africa, Nairobi today has, I believe it's the second largest investment destination, second or third, I don't know what it is now, but it has a lot of local capital. And so, those two things. Number one is the talent. Number two is the capital. I think the third thing, for us going to Nairobi first was that it also has a large local economy, right? Like Kenya's GDP is 3 times the size of Zambia's, right? It's East Africa's largest economy today. And so you have these 3 things working in your favor. Number one, great talent, local and international. So for some reason, when people want to live in Africa, they would rather live in Nairobi than in Lusaka or in Lagos. And now that I live in Nairobi, I get the appeal. Guys, it's a pretty dope place to live. Once you've been there, so you know what I'm saying. The food's good, the weather is good. It just makes it a lot easier to run a business. And then the other 2 things where you have you in addition to talent, you have the capital and the large local market. It made sense for us to start off in Kenya, and then we're now scaling our business. We're now in Nigeria as well, where over the last 6 months have helped over a couple hundred restaurants buying products. It's still a much smaller part of our business, but we think it's an important part of our business as we continue to grow this year.
Great. Thank you very much, Njavwa. Great points there. And I think it's been exciting to see all that you've been able to do with Top Up Mama now and how just fast paced that growth has been. And I'm sure everybody agrees on it when they say we're actually rooting for you to win and, we're hoping for the best as it goes. We have a couple of questions. I have a couple of questions from some of the people that had registered. Whilst registering, they had put in a few questions, and we'll be getting to that. And also, we have a few questions in the chat. George, Sam is asking if they can ask audio questions. George, are you there?
Yes, I am. Yes, we can ask audio questions. Just I'll trust you as a moderator to look at to evaluate time.
Yeah, because of the time. Okay, all right. Let's see how that goes.
A few questions on Facebook and LinkedIn as well, because we're live on both platforms. Yeah.
Oh, great. Okay. All right. Okay, thanks for that. There's been major interest in Njavwa, as you can see. So overloaded with questions. Okay, so try and get through to them, Njavwa, as quickly as we can, right? And I'll trust you also to be as quick as I'll try and be, so that we can get to as many as possible. So Tumbone is asking, was Musanga primarily focused on local or international deliveries? Which of the two was more profitable for the business?
We were primarily focused on local intercity deliveries. Those tend to be more profitable than international deliveries. Having worked at Lorry as well, I just know that local deliveries is where the money is from a margin perspective. It might change in future, but right now that's the case.
Great, thank you. Did Musanga own any of the trucks that the business depended on? If yes, did this work out for the business? I remember there was a truck that had a big Musanga logo. Yeah? Did you own any of those?
No, we didn't, but what we did is, because we worked with single owner operators, we would brand some of the vehicles. Our model was completely asset light.
Oh, okay, asset light, great. There's a question from Luke saying, in growing Top Up Mama, are you hiring differently now versus with Musanga because of the hiring mistakes and lessons from them? Can you expand on those? I think you talked about that a little. Maybe we could just do a quick summary on that.
Yeah, so we are hiring differently now. We're hiring not only differently, but we're hiring different types of different types of experience levels and stuff. And so, I think in terms of like the different things we're doing, it's firstly the way that we're bringing people in. This one simple thing is just like the way you interview. Now, maybe one of my co-founders was a consultant before, and so there are a lot of like consulting type ways of interviewing. If I was interviewing for a job at Top of Mama, I probably wouldn't be hired based on the current process, which is something that we need to probably change. But yeah, there's definitely a lot more structure in terms of the way that we're hiring now, and it's always evolving. We're always trying to evolve.
Yeah, talent. Ever the headache for every entrepreneur. There's a great question from Sam, and she says, what do you think you did well through the failing process? Like, what did you get right? Even today, you sleep easy at night because you know you did it right through the failing process of Musanga.
In business, it's a people business. Yeah, running a company, you're in the business of people. The thing that I'm proud of the most is that everyone, including our investors, I'm still in touch with all of them. In fact, our lead investor is an investor in this company now. They've doubled down now. And our second investor is also somebody who's looking at investing in this company now. And so, despite the hurt feelings, there was a conscious effort to ensure that, the people that I worked with are people that we're still in relationships with. And so, there was that, also the fact that we're still paying our suppliers even after the company has shut down. Me and my co-founder would take money out of our own pocket to try and pay them. I think I'm very proud of that because I can look at those people in the eyes and say, look, we gave this our best. It didn't work out, but we're at the core of this. It was like we gave this our best, and you know that, right? And so I think in all that failing, I think remember that you will still be the same person even after you go through this, and just try and handle that entire process with grace.
Okay, great. Sounds good. We have a couple of questions. I'm jumping in between platforms now. So we have a question from Mutoba on LinkedIn, and he's asking, before Musanga ran into financial trouble, what strategies did you use in your marketing to onboard the drivers and clients?
So yeah, it's a good. I mean, there was a lot of just in-person signing up drivers. So truck drivers tend to be in certain clusters. So if you go to Kamwala, that's where the drivers are. If you're looking for international trucks, you go to certain parts of industrial area, you find a lot of them and you just bring them on. And then it also turns out that it's a heavy referral business. So if you have shipments, you can call one of your truck drivers and say, hey, we're looking for somebody to move. So I think that was the first way, just knocking on doors and trying to sign people up. And then it turns out that when we started using, social media to attract drivers, the leads that came in through social media were of a lot higher quality. And so the churn on those drivers was a lot lower. And so, it's just kind of a mix of direct to consumer, just like direct sales and social media.
Okay. Sounds good. Another question from LinkedIn by Victor Odera. He's saying, what do you see the biggest opportunities for startups given the evolution of technology and internet penetration currently in Africa?
I'm bullish on food, I'm bullish on African food and food consumption. If you look at the average African today, the majority of the money that they make goes to food. Think about that. The majority of, I think it's around 70% of the average African salary or income is going to food expenses. And so just fixing the food supply chain. And the thing is, it's such a broad industry that you think about not only the production of it, you also think about the distribution of it, which is something that we play in. But then also just the transportation of it. For example, Musanga is still a good idea. Like somebody just needs to get it done well. Like somebody just needs to get it done well and find a way of going around it. But the thing that I'm really passionate about right now is how do you feed 1.2 billion people and how do you feed them well? Last week I was with my team in Lagos at a market called Mile 12, which is one of the largest wet markets in Lagos, and maybe one of the largest also in Nigeria. And it's a fascinating place because this is where a lot of the products are coming from, and you begin to see that, hey, we still have a lot of work to do as startups and as entrepreneurs. It's like everyone wants to build the next API that connects to an API that connects to another API. It's like, yo, who's making food? I'm hungry. You know what I mean? It's like, yo, who's making the food? Because people are hungry out here. You know what I mean? And so those are some of that. I'm super bullish on food, and hopefully, hopefully we make this such a success that you see why.
Definitely, I agree with you on that one. I think especially for a continent that imports over $30 billion of food products annually, there's a very big market in terms of value to be created by entrepreneurs in that area. So yeah, like I said, we're rooting for you on this one. There's another question, this one from people that we have on Zoom right now. I think this is Tumbone again. And the question is, did you come across a lot of regulation with respect to running an e-hauling logistics business? Were you required to register as a transport or logistics business? I think this has to do a little bit around regulation and what you have to do and how you've managed that. And maybe you could just tally it with what Luke has said, because also Luke is asking a question around regulation. So maybe we could tackle those together. And Luke is saying, in SA, it is nearly impossible to move people off the bus unless there are very serious discrepancies in performance. Is it that also the case in Kenya? If so, how do you action on your advice? So regulation one on the talent side, other one on registration process in terms of logistics. Yeah.
So the first question that Timon has asked, I think, the short answer is that there actually isn't that, there aren't that many laws in place for e-hailing logistics. Like the government still doesn't know what the hell that is. So they haven't really caught up there. And I don't know if it's changed, but at the time, I don't think we had any special permits. We just did business. Even if we did, I think we just ignored them. I don't know, don't tell them, but that's what happened. Luke, that's a very good question. South Africa is notoriously hard. It's notoriously hard to like hire and fire in South Africa. It's a hard one there. Kenya is slightly different. But I think the core thing is the same, that like people that you work with are sacrificing a ton to come join the company. And so, it's just depending on how you see it as a company. Like we had a tough situation last year where we hired quite a lot of people as we were scaling, and had to make the tough decision of letting some senior people go. And we had to ensure that we gave these people enough compensation for a few more months, because again, they're taking the risk to join us. But that wasn't legally required. It was just something that we wanted to do. South Africa, however, I think is a unique case where it's really hard. I've heard of the situation where somebody's employee was caught stealing, and so he fired that employee, and then that employee sued the company and won. So South Africa is a different case. Look, I feel you.
Yeah, great. And just to also mention on that, I always feel like some of the developing countries like our own get to put up labor laws for developed countries that work, for in a developed country space. But then, in a developing country, you sort of need laws that are favorable for, investments and businesses and that kind of a thing, but you don't usually see that. So yeah, interesting that that's your take on that. So Amanda on Facebook is asking, what's the name of that company that owed you a lot of money? We need to avoid them. I'm not sure you're in a position to.
I wouldn't state their name because the mother company was actually a really good company. The group was a great company. It was actually just like badly managed, and like in hindsight, like they fired all the senior leadership, and so it was like just a badly managed time with the company. But I wouldn't say their name publicly.
Okay, and another question from Facebook, asking, delivery services were the best. Did you ever consider going back to doing local deliveries for small businesses, or is that no longer financially viable?
Yeah, so I think, I started off saying that as you make progress and as you succeed, you tend to set your ambitions a lot higher. And so we started off doing the bike business, but then we knew that, when we started to see other companies in our space in Kenya and Nigeria get funded, like Kobo 360, Lori and Sandy, we're like, man, I want to be in that space myself, right? And so when you look at some of the numbers that enabled them to be able to raise the money that they could raise, it just wasn't possible for us to do that with just the pure delivery motorbike business. The other thing is that if you look at Zambia, in Zambia, we don't use motorbikes for taxis, or we don't really have a motorbike culture. And so in addition to there being a small demand base, it's also really hard to get the supply of motorbikes to build a marketplace that works. And pardon me, if you're building a marketplace, you want both sides of the marketplace to have liquidity. And what I mean by liquidity is that if you're Uber, for example, you need enough vehicles, and you also need enough people who need a car. With motorbikes in Zambia, this is specifically a challenge in Zambia, you don't really have independent motorbike riders, right? Whereas in Kenya now, I see how, like, you know, if you own a bike, they're like, there's a border culture where people just own bikes for transport. You don't have that in Zambia. So the motorbike business, we shut that down for that reason.
Okay. Great. I've seen it creeping up now, and we have a lot of motorbikes on the streets, partly because of courier services, I want to believe. There's some interesting comment and question from Penjani Mkandawire on LinkedIn, and he says, really insightful talk, Njavwa. Thanks for sharing some of your experiences. The album metaphor really hit home. So he's asking, you've mentioned that having funding really helps cushion against risk. Nowadays, what is your approach to business risk? How do you vet ideas or formulate strategy?
Oh man, I'm the worst person to ask about strategy. I go with vibes, guys. I said that earlier. How do we think about risks? So I have a framework that I use to go with things, and it's kind of like, especially as it relates to like businesses and stuff. For example, our decision to move to Nigeria last year was one for me that you know, this framework came to play, where instead of looking at what the risk of doing it is, it's important to look at what the risk of not doing it is, right? Like, most mistakes that we make are not mistakes of commission, right? It's like mostly the mistakes of omission, the things that you didn't do that come to bite you in the ass. And so, you know, from that perspective, it's like, you'd rather try and fail than not try at all. And so it's like, the downside to that is that, like, you end up trying a ton of things. But, you know, the argument is that Kobe Bryant had the most misses. Michael Jordan probably missed the most, you know, shots ever in history, probably some crazy number like that. And so it's like, you know, it also just means that, like, the way that, at least the way that I see things now, is kind of like, you know what, screw it, let's just fucking get this done. If we fail, we fail. But at least we have something to write about in the next Medium article, right? So that's kind of just like my perspective. It's like, you know, like, let's try it, because you can only lose the time that you put in and 1x of the money you put in. And you can't lose more money than you've put in. However much money we raised from Musanga is exactly how much we lost. But you could potentially lose the upside, right? Like, our decision to, like, move into Nigeria, like, okay, let's put a couple $100,000 here and like attempt to do it. If it works, this could be a multi-billion-dollar business. If it fails, it's a couple $100,000, right? And so it's like, it would suck. We spent a lot of time, but man, if it does work, it could be like transformational, right? And so thinking about it in that perspective, and I think as we are scaling now, and like there's a lot more at risk. It's like, yeah, you put it in, but you know, even in, I sent an annual letter to all of our shareholders, and you know, one thing that I said is, you know, our first annual shareholders letter, I told everyone, like, hey, listen, guys, this is not going to be one of those companies where we are doing the safe thing. I'd rather we try and we fail and the company shuts down in 2 years than we kind of just paddle along for 10 years. No, I'd rather we go balls out and fail in 2 years than fail in 10 years because we're just moving too slow. So it just depends on your personal temperament and the things that you like, and your team as well, right? You need a team that can kind of structure you in that way, and so that's how I see it. I don't know if that answers the question.
Yeah, great, great. I think it does, and you've talked about, just try and break things quickly, so that you can figure out thereafter what to do. But great point on, failures because of omission usually, and not because of commission. Some on Zoom is asking, can you address the issue of TAM, which should be total addressable market, and how big it was for Musanga, and the total addressable market now for Top Up Mama? How does TAM influence the way that you make business decisions now? I think you touched a little bit about
Yeah.
it when you talked about the food market. Yeah.
So actually, this is such an important question, and for Zambian startups, it's something that you guys need to be aware of. It. Look, I'm Zambian, but for all intents and purposes, Toa Mama is a Kenya company, right? We're the city has started the company, and they deserve it.
Wow.
But unfortunately, but the thing in Zambia is that there are like 1.7 million people in Lusaka. The entire country has 17 million people. I'm in Lagos right now. I swear, I think there are like 20 million people in this city. And some days it feels like there are 20 million people in just on the road because of the traffic, right? You just have like much bigger addressable market without having to move anywhere, right? The GDP of Lagos is larger than the GDP of Zambia, Botswana, Zimbabwe, Malawi combined. The GDP of one city, right? So even when you're speaking to, again, investors, it's a conversation around like, if you invest in one Nigerian company, the likelihood of that company being big and becoming a multi-billion-dollar business is significantly higher than the likelihood of somebody being in a market that only has, the total spend in that market is significantly lower. So, my advice to any Zambian companies, and this is actually something that even Strive Masira, speaks about. Strive started in Zimbabwe, but as you guys know, he quickly expanded, and that's the thing with people who are in low TAM markets where that it's your home and you love it and you're trying to do something, you're proud of your country and you want to do something there. Actually, you want to take a step back. Forget you're Zambian, forget you're African. You come back and say, in this continent, which if I was an international investor, which part of this continent would my idea best work? And if it works, get a backpack and go there. It's going to be uncomfortable, but Zambians, it's about time you moved, yo. It's about time we became immigrants for a bit. And, especially across the continent where you just say, all right, which part of the world does this idea make the most sense in? And again, you can build a okay business and a relatively big business in Zambia, but it just depends on the industry you're in. Zambeef has built a big business in Zambia. I think they do hundreds of millions of dollars of sales. But if you look at the customers they're targeting, it's food. They're targeting literally everyone from the richest people in the country to the poorest people in the country. So the addressable market is quite large. But if you're trying to do some fintech that helps fintechs, hey, you're going to have to move. You're going to have to find a big enough middle class to service those businesses.
Great point. Great point. Thank you very much for that. We have a question from the registration form. Somebody was asking, how would you describe your work culture at Musanga? This is the work culture you have at your new company, Top Up Mama.
It's hard for me to describe work culture as, the co-founder and CEO of a company. Sometimes, I see things from a different perspective, and I've haven't seen it from different perspectives. Like, information isn't as free flowing as one would like, right? But I would say that the people that we worked with at Musanga. You know, those definitely. I remember one of my colleagues at Musanga went for a sales meeting, and she was in the meeting, and somebody else was on the phone. She was meeting a customer or something, and the person showed up maybe 3 minutes late, and she's like, "Man, you know, Njavwa, you're always giving us shit for like showing up on time and like you know, like not being on your phone when you're in meetings, and like in the moment it sucks, but then when you go out and be in the marketplace, you really see how like we have an edge as like the people that work there." And so I can almost guarantee the people that I work with directly at Musanga, like all those people, like they're pretty dope people to work with, right? Like they're probably way ahead of like the majority of other people who like, you know, we're working at, you know, no knock on any big company, but like, you know, some of these large corporates that just don't have a culture of like getting things done. And so like somebody who worked there is probably more intense. Where we are now, I think, you know, it really shifts. I think number one is there's a funny thing is that like some of my colleagues give me shit for not being structured enough. And I'm like, man, you don't know how far I've come. But you know, like I think now there's a bit more of a structure on like the way that we operate, like what we're focusing on and the things that we need to get done. But it's hard for me. Like culture is one of those things that's like, you know, it's hard for you to describe it, especially when you're living through the day-to-day thing. And it's also like, it's not one thing, it's a continuum of things. It's the way decisions are made every single day. And so it's hard for me to pinpoint, but I would say it's still the same basics matter. It's about obviously being a good person first, but getting things done is important, and you know, moving quickly is still important, and all those small things.
Okay, great. Thank you so much, Njavwa. I think we're coming to the end of the session, and thank you so much, everybody that joined us for the session. And all, I know there are so many questions that came through, but due to time, obviously, we can't get to all of them. In conclusion, Njavwa, what would be the one advice that you'd give an entrepreneur that is just starting out and is looking at someday building a top-up mama or something bigger? A Zambian entrepreneur.
What's my advice to entrepreneurs?
Yeah, the ones that are just starting out their entrepreneurial journey, and they're looking at what you've built now. What would you advise them?
Yeah. What is the most important thing I would say? I think questions like it's always hard. Like, what's the one thing you'd say? I don't know. There are several things I'll say, but I think, you know, quoting Fred Swanica, who's the co-founder of African Leadership University, and many other things, is this one will be targeted at African entrepreneurs. The number of problems that this continent has is significant. We don't have the luxury of not thinking big. We don't have the luxury of doing things on a linear scale. This continent needs exponential thinking, exponential execution, and not doing that is misusing the privilege we've been given, the privilege of education, the privilege of, you know, access, which we have. So if you're on this call, there's certainly a lot of access that you have. And, you know, I think that there's a need, an urgent need to think bigger. However big we've been thinking as a continent, we need to think bigger. The continent literally needs at least 1,000 Dangotes in the next 30 years. And Dangote being this idea of like somebody who can create jobs for at least 100,000 people, 200,000 people. At that scale, we need at least 1,000 of those people in the next 30 years. And that's not going to come by playing it slow, being the best delivery company in this part of town, in a small city, somewhere in a small country, somewhere in a small continent. It's like, no, we actually have to dominate. That's something I would say. I would say that we don't have the luxury of doing things slowly on a linear scale. We have 1.2 billion people. The majority of them are poor, and the populations are growing rapidly, right? I'm in Lagos now. Every year, the population is growing at 8%, right? This would be the third most populous country on the planet in 2050, right? How many more jobs do you have to create in order to ensure that these youth that are coming on have something to do? Because if you don't, it then becomes a security risk. And so, it's not that we have to think big because it's a fun thing to do. No, it's misusing our privilege if we don't. It's actually going against what we need to do. And I think to close off with a quote, one of my investors said this. It was kind of stealing from Fela Kuti, but putting in the business sense, is that in Africa, doing business is not just to build wealth. It's about a revolution. We have the political freedom that a lot of our parents, as we know, didn't grow up in Zambia. They grew up in Northern Rhodesia. A lot of our parents didn't grow up in these things that we call countries now. They were colonies. And the fact that we have so much privilege to actually make a step forward, it's like, we can't just, now that we can buy cars and be comfortable, just take it easy. No, it's not about building wealth. It's about the revolution that building companies brings. And so, yeah, I think that's something I would like to say.
Say no more, Sensei. Thank you so much. It's been great chatting with you, Njavwa. Thank you for taking the time. And I know that a lot of people have found all the advice and all the information you've given out very, very, very useful. So many thanks to you. And like I had said, we're rooting for you, for Top Up Mama and what you're trying to do with that. So yeah, thank you. Thank you to the Bongo Hive community, everybody that joined us on Zoom, on LinkedIn, on Facebook. Thank you so much. So anybody else that has that needs to interact with Njavwa, how can people get through to you quickly? How can they find you?
LinkedIn, Twitter, those are the main ways you could reach out. I'm on as Njavwa Mutambo.
Njavwa Mutambo, you can look for him on LinkedIn, Facebook, Instagram as well, so that you can chat with him for all the other questions that you had. Thank you so much, everybody. Have a great night from all of us and everybody else. Share a great week. Thanks, Njavwa.
Thanks, guys.